Forget SPY. Forget QQQ. Meet the ETF nobody is talking about. VanEck Rare Earth and Strategic Metals ETF. RUMX. RUMX exploded last year with eye-popping returns. And now people are finally noticing. Why rare earths? Because these metals power EV motors, wind turbines, smartphones, and defense tech. Neodymium, terbium, dysprosium. Not sci-fi words. The building blocks of modern technology. Think of rare earths as the secret sauce inside everything that moves or transmits signals. Demand has surged. EV adoption is rising. Renewable projects are scaling. Defense budgets are expanding. Every electric vehicle needs powerful magnets built with rare earth elements. More EVs equals more metal demand. RUMX gives you a basket of miners, refiners, and strategic materials companies, instead of betting on one single stock. It holds names across the entire supply chain, extraction, processing, and materials production. That makes RUMX a thematic play on a real-world necessity, not a meme, not a hashtag trade. But let's be honest, rare earth stocks are volatile. They can skyrocket and then wobble hard on a single headline. Volatility creates opportunity for patient, disciplined investors who believe in the long-term story. Geopolitics matter here. Supply concentration, trade tensions, export restrictions. Prices can move fast in either direction. RUMX tends to benefit when markets price in scarcity, or when green tech spending ramps up in the US and Europe. This isn't some tiny experiment. It's issued by a recognized ETF provider and holds sizable industry players. If you want exposure to the metal story without single stock risk, a thematic ETF like RUMX is convenient. That said, risks are real. Regulatory shifts, commodity price swings, mining project delays. A smart approach? Position sizing. Treat RUMX as a satellite allocation, not your entire portfolio. Miss the first run? Some investors look to pullbacks for long-term entries, but timing commodities is never easy. Do your homework. Know which companies in the fund are actual producers, and which are explorers with big promises. Also consider taxes and expenses. Thematic ETFs often carry higher fees than broad index funds. For US investors, RUMX connects to themes you may already own. EVs, semiconductors, clean energy. It's exposure to the raw materials side of tech. Humor check. RUMX probably won't trend like a crypto pump, but it can still surprise you. Reality check. This is commodity and mining exposure wrapped in ETF convenience, not a guaranteed rocket ship. Quick recap. VanEck Rare Earth and Strategic Metals ETF. Ticker RUMX. Niche. Thematic. Tied to EVs, renewables, and supply chain geopolitics. It had a strong run and sits at the intersection of technology demand and global resource scarcity. If you like real economy themes and can stomach volatility, put it on your research list. If you prefer boring index funds, keep collecting those S&P returns. If you like a little spice, RUMX adds seasoning. Final thought. Niche ETFs let you lean into trends without single stock drama. But risk never disappears. Not financial advice. Match every investment to your time horizon, risk tolerance, and goals. If you want a deep dive, we can break down RUMX holdings, fees, and tax considerations next. Drop a comment. Would you rather own the tech or the metal behind the tech? And whether you choose RUMX or stick with broad indexes, invest with conviction. Because in the long run, the best returns are often boring and beautifully compound.